Welcome back to the Daily Stack. Today, it's September 19th, 2025. This is not financial advice. If it were, it'd be printed on the back of a Chipotle receipt, 2 burritos, 1 guac, and a reminder to stop buying the market top. Today is one of those days where the headliners sound scattered, but they actually connect like puzzle pieces. The SEC just cracked the door wide open for more crypto ETFs. Michigan, of all places, is trying to put taxpayer money into Bitcoin. And while all that's happening, whales are throwing around billions in ETH and Doge like it's happy hour. At first glance, it looks random, but it's all pointing to the same thing. Crypto isn't just sneaking in anymore. It's getting an invitation to the inside. Let's stack it.
Stacks on the rise, yeah. Money multiply, yeah. 808s hitting old squad, getting liar. Moon talk on the lead, rockets in the sky, yeah. Bitcoin to the moon, Bitcoin to the moon.
The SEC opens the ETF floodgates. It just approved a generic listing standards for spot crypto ETF.
Explain what this rules change means for spot crypto ETFs like the XRP and Dogecoin funds that came to market today.
Yeah, so straightforwardly, all exchange-traded funds have to go through this kind of rulemaking process where they have to apply for permission because there is no legislatively clear path for an exchange-traded fund to come out to market the way that you might see like a normal company go through an IPO process. And so they all go through this kind of application process. And what we've seen through crypto really over the last decade was this long drawn-out process of applying for the ETF. And I'm talking about the Bitcoin ETF here. You apply for the ETF, and then there's some rationale or reason that was given for the denial. And each time we went through this application process, we would see a different reason for that. And the industry was slowly curing all these difficulties and whatnot up until, of course, we had the Bitcoin ETFs launch early last year. And so what happened now with this new like ETF rule process, if you will, is just full clarity for the industry. That is, if you want to launch an exchange-traded fund on these commodities, what are the requirements or prerequisites, whether it's an active futures trading market where contracts exist on CME, for example, for some of these commodities, and whether that basically gives permission for new vehicles to come out without this long, drawn-out kind of discovery process of guessing and checking whether these products can come to life.
Translation: if an exchange like the NASDAQ wants to launch one, they don't have to wait months for individual approval. The old process took about 240 days. Now it's closer to 75. Think about it like a nightclub. Bitcoin and Ethereum were the VIPs who got in early. Everyone else stuck outside arguing with the bouncer. Now, instead of pleading your case, the club just hung up a sign, "If you meet dress code, come on in." And it's not just Bitcoin and Ethereum anymore. This means Solana ETFs, XRP ETFs, maybe others down the road.
So what do you think will change now for crypto ETFs, especially given there are still several applications pending with the SEC for ETFs tied to different altcoins, including Litecoin, for example?
I mean, I think having this kind of like standard approach to analyzing the ETFs or the applications that is going to allow them to come to market faster. And to the extent that there are new coins coming into it, it's not like you can just list any coin at this point. Some of these rules have different criteria in place. Like, for example, does an existing futures market exist traded on an exchange like the CME group? And so I think you're just going to have a host of different ETF products on known commodities where these conditions are already met, where they're not going to have this long drawn out process. They're going to come to market more quickly, and they're going to be vehicles for additional capital to move into some of these, altcoin effectively spot commodities. And so you're probably going to see like a natural bid in some of these, I think, through these new ETF products.
Imagine retirement accounts holding Solana next to their Johnson & Johnson stock. Your grandpa could end up with exposure to Doge without even knowing what a meme coin is. This is the kind of mainstream on-ramp this unlocks. The SEC just went from bouncer to buffet manager, and markets react like markets. So here's the plot twist. Instead of mooning, crypto dumped today. Solana, Doge, and a bunch of alts gave back their weekly gains. It's like training hard all week and then demolishing a pizza on Friday night. Bitcoin, though, is still holding on to the higher lows. Slow, steady, patient. Think of it like push-ups. You don't get shredded overnight, but each rep builds the base. Bitcoin's chart right now is more about form than flash. That's why the sell-offs didn't change the big picture. The ETF approval isn't about today's candles. It's about the foundation being poured so that the next big money wave can roll in. The charts are just the parking lot drama. The real story is inside. Michigan wants a Bitcoin treasury. And now to Michigan. They want a Bitcoin treasury. State lawmakers advanced a bill to allow up to 10% of the treasury reserves in Bitcoin. Yeah, taxpayer money in Bitcoin. That's a milestone. Until now, governments treated Bitcoin like a sketchy cousin, always around but never invited to the family photos. Michigan is basically handing over the house key and saying, yeah, you can crash in the guest room. Imagine paying property taxes and finding out some of it is in a Bitcoin wallet. For decades, treasuries held reserves in bonds, cash, maybe even some gold. Bitcoin changed that playbook. It's like moving from AM radio to Spotify. Same purpose, way different experience. And it ties right back to the ETF move. Wall Street is getting its bridge with ETFs. Michigan is building its own bridge with reserves. Different doors, same house party. Michigan might buy some Bitcoin for state reserves, 10%. That means taxpayer money is literally sitting in Satoshi's piggy bank. Governments used to fine you for using Bitcoin, now they want to hold it themselves. And while all that's happening, the whales are flexing. In the last few days, $4 billion in ETH got scooped up. That's not DCAing $50 on Coinbase. That's Moby Dick clearing out the seafood buffet. Doge whales are buying too, probably betting Elon will eventually tweet something ridiculous and send it flying again. And XRP, despite its ETF buzz, dipped today. Classic, buy the rumor, sell the news. Hype doesn't always match performance. Like when your buddy hypes a concert for months and the band plays Wonderwall 3 times in a row. What matters isn't today's chart. It's that whales are loading up while regulators and governments are opening doors. It's all part of the same current. Why it all connects. So what do we all have here? The SEC lays down smoother ETF rules. Michigan considers a Bitcoin treasury. And whales are scooping ETH and Doge. Put all of those together into one picture, and crypto is moving from outsider to infrastructure. ETF means Wall Street adoption. Michigan means government adoption. Whales mean deep pocket conviction. That's 3 different signals that are all flashing the same color. Prices might wobble now, but look around. The roadies are setting up the stage. The lights are warming up. The crowd is buzzing. The headliner, it hasn't come out yet, but you know the drop is coming. And that brings us to the tip of the day. Don't get baited by hype candles. The market loves to pump on rumors and then dump on confirmations. Think like Michigan. Allocate a percentage, hold it, and stop trying to guess every headline. Running leverage today? You're basically handing your lunch money to whales who already ordered dessert. Stay in the game. Dollar cost average. Build strategy. So here's your stack. The SEC just turned ETF approvals from a marathon into a sprint. Michigan is lining up to put Bitcoin in its treasury. Whales are hoovering billions in ETH and Doge while retail freaks out about a red day. Candles might look weak, but the bigger moves are screaming adoption. Only ever click the official hardware link in the episode description. Skip Discord promos, Twitter DMs, or meme giveaway hypes. Your keys remain sacred. Stack smart, stack daily, and I'll see you DJs tomorrow.
Cashing out soon. Meme coins go boom. Bitcoin to the digital treasure, my wallet like a bank vault.